Donald Trump has levied an additional 10% global tariff under Section 122, a provision allowing the president to impose levies for up to 150 days. This was as the US Supreme Court justices voted 6-3 to strike down the bulk of his levies, which were justified under the International Emergency Economic Powers Act, IEEPA, which allows the president to impose unbounded tariffs. It's not always obvious which measures will stay or be removed. Tariffs targeting specific sectors like steel, aluminium, cars, and car parts are still in place under different trade laws. However, the IEEPA, a broad tool previously used to push trading partners for concessions, is no more available. The court was also mute on refunds, how, when, and even if leaving room for another legal war. Indeed, for each product, a different mix of, say, Chinese exporter, importer, wholesaler, reseller, and consumer at Walmart may have borne the tariff cost, and they may be entitled to refunds. Refunds will not be straightforward, and lawyers will be kept busy. The opposition were already taking their victory lap as Trump announced victory, stating that the ruling affirms his authority to tariff under other legislation, but not IEEPA. Markets initially moved up, later giving up gains. Nike, a major importer, closed at minus 0.07%. The mid-cap Russell 2000 was also lower by minus 0.05%. Markets are not seeing this as improving clarity on the trade front as it deals with fresh tariffs and hard to predict legal trajectory. No one expects Trump to back up on tariffs or to gladly refund amounts collected or rescind deals he claims could have been impossible without his peculiarly aggressive trade diplomacy. Regardless of how this develops, many businesses and industry associations reacted with guarded hopes for more predictable trade policy and refunds. Thousands of companies, not just those that sued the administration, will now decide whether to pursue refunds, as over $175 billion in US tariffs collected could eventually be refunded. The new 10% global tariffs, which comes with a 150-day time limit and effectively replaces the IEEPA duties, could imply lower US tariffs for some of the countries that had either struck trade deals with the Trump administration or were in ongoing trade talks. The European Union, for example, agreed to a 15% tariff as part of its trade deal with the US. A lot still to be clarified. Trump has more cases awaiting decisions from the US Supreme Court, and it can't be wise to pick a battle with the highest court of the land, who have, in this instance, notched a clear win for independence and separation of powers. Asian trading partners are reviewing this decision and the Trump administration's reaction, stating they will respond accordingly. China, which is set to welcome Trump later in March, has not officially commented or initiated any counter actions, as the country is currently on an extended holiday. Still on global trade and Asia, the US and Indonesia also agreed to reduce tariffs, with Indonesia set to buy over $33 billion in American agriculture, energy, and aviation products. President Trump and Prabowo Subianto pledged to implement the deal, which aims to boost economic security and growth for both countries. Indonesia will remove tariffs on 99% of US exports, including agricultural goods, health products, seafood, auto parts, and chemicals. Hello, this is Global Business Insights, where we look at the world from a business perspective and bring you news, views, and analysis that helps to bring you up to date on the context. The US Supreme Court ruling on tariffs comes ahead of the State of the Union address and at the heels of latest disappointing GDP data. The American economy grew much more slowly than expected In the fourth quarter of last year, GDP rose by just 1.4% on an annualized basis, down from 4.4% in the previous quarter. The print badly missed estimates ranging from 1.9% to 2.8% annualized pace in Q4. The slowdown in consumer spending from the 43-day government shutdown also potentially dragged Q4 GDP down by about 1.1 percentage points. Still, analysts expect GDP to pick up in the first months of 2026 when large tax refunds are expected to significantly boost household consumption. Other details of the report showed that the core personal consumption expenditures price index, that's the Fed's preferred inflation gauge, rose by 2.7% on a quarterly basis in the fourth quarter, below the 2.9% increase recorded in the previous quarter, but above expectations of 2.6%. On a monthly basis, the core PCE price index increased by 0.4% in December, up from 0.2% in November. The minutes from the Federal Reserve's January meeting published on Wednesday revealed that officials are raising the threshold for further easing in 2026. Policymakers stressed the importance of seeing continued signs that inflation is steadily approaching the bank's target and recognized that monetary policy might have to stay tight for an extended period if price pressures do not subside. The latest above estimate PCE reading strengthens the argument that the Fed needs to wait. With unemployment relatively stable and economic activity somewhat holding up, inflation still near 3% would give officials little reason to rush. In the United States private sector, business activity grew at a marginally slower rate in February compared to January, as indicated by S&P Global's preliminary composite purchasing managers index, which decreased to 52.3 from 53. During this period, the manufacturing PMI fell to 51.2 from 52.4, and the services PMI declined to 52.3 from 52.7. Both metrics were slightly below analysts' expectations. To other data releases, the UK Composite Output PMI rose 0.2 points to 53.9 in February, marking a 22-month high and against consensus expectations of a 4. Analysts now see stronger activity, pointing to 0.2% quarter-on-quarter GDP growth in Q1, with upside risks also forecasting Bank of England rate cuts in March and June. The Office for National Statistics said UK retail sales rose 1.8% month-on-month in January, sharply beating the 0.2% forecast and accelerating from December's 0.4% increase. On an annual basis, retail sales rose 4.5% from a downwardly revised 1.9%, previously 2.5%, also comfortably above the 2.8% forecast. Also good news from Europe, as the Eurozone's preliminary composite PMI arrives at 51.9 in February, higher than estimates of 51.5 and the prior reading of 51.3. The overall business output expanded at a faster pace due to an improvement in both the manufacturing and the services sector activity. The manufacturing sector activity has returned to growth after declining for several months, and the service sector output has expanded at a faster pace. EU Trade Chief Maros Sefcovic stated on Friday that the European Union should be prepared to implement its free trade agreement with South America's Mercosur bloc in the upcoming months, notwithstanding opposition from France and pending legal proceedings. The agreement, involving Argentina, Brazil, Paraguay and Uruguay, stands to eliminate about 4 billion euros, $4.7 billion in duties on EU goods exports, marking it as the largest free trade accord for the bloc in terms of potential tariff reductions. Concluded in January after 25 years of negotiations, the deal has received substantial backing from Germany and Spain, while France has expressed reservations due to concerns over increased imports of commodities such as beef and sugar, potentially impacting domestic agricultural interests. Last month, the European Parliament voted to contest the agreement in the bloc's highest court, which could postpone its implementation by up to 2 years and possibly jeopardize its adoption. Nevertheless, the European Commission retains the option to enact the agreement provisionally at an earlier date. In Nigeria, a KPMG analyst predicts political spending ahead of the 2027 elections will drive inflation, foreign exchange instability, and cost pressures. That's in 2026, likely causing investors to adopt a more cautious approach. At the 2026 Audit Committee seminar in Lagos, Oluwole Adelokun, partner at KPMG West Africa, noted that international support for Nigeria's counterinsurgency efforts will rise, but sabotage risks due to election dynamics remain. He explained that these campaigns could affect business operations and employee safety, especially for companies with wide geographic presence. Adeloko emphasized that 2026 will challenge the Nigerian government's commitment to macroeconomic reforms amid risks of slippage and increased political spending. And on Friday, Anglo Gold Ashanti reported that its full-year profit nearly tripled, mostly thanks to record high gold prices and higher production levels. The company also announced reserves approaching 5 million ounces at its U.S. Greenfield project. Headline earnings rose to $2.725 billion for the year ending December 2025, compared to $954 million in the previous year. In 2025, AngloGold produced 3.1 million ounces of gold, a 16% increase over last year. This growth was largely attributed to the first complete year of output from Egypt Sukari mine, where AngloGold acquired a 50% stake in 2024. Wood Mackenzie experts say Big Oil's strategy is focusing back to the upstream sector to prevent production from sliding in the 2030s. The majors need access to large, long-life resource bases now, and that's why certain countries like Nigeria, Iraq, and Libya are now back in focus. Majors like Shell, Total Energy, Chevron, and ConocoPhillips are securing durable production capacity for the next decade and beyond, especially where familiar big conventional resource potential exists and the economics are attractive. Oil prices were near 6-month highs on Friday after Trump warned Iran that really bad things will happen if there was no deal over its nuclear program. International benchmark Brent crude futures closed the week at over $70 per barrel as the geopolitics helps near-term outlook. Still on reactions to the U.S. tariff Supreme Court ruling, German Chancellor Friedrich Merz said today that he expected the tariff burden on the German economy to be lower after the ruling. Speaking to media, Merz said there needed to be talks with Washington before German companies could recoup billions, adding that the European Union would coordinate closely ahead of Merz's upcoming trip to the US. Well, that's it on this very special edition of Global Business Insights. This is Bode Oshosami. Please do not forget to subscribe and hit the notification button. Thanks for watching. Enjoy your weekend. Bye-bye.